Hey there, Susan Chuguna here, and today I want us to talk about money market funds. A while ago, I did a very long video on money market funds, but I thought it would be better to create a series of short videos or breaking down different aspects of money market funds and going into details to help you understand what they are and how you can grow your money through money market funds. We'll discuss every aspect of money market funds, and I promise at the end of this series, you will know everything that you need to know about money market funds and start investing in them. This is the first video in the series, and today I want to talk about the basics, what the money market funds are, how they work, what happens if the company you have invested in went out of business, and why you, as an investor, might want to consider investing in money market funds. Okay, so let's get into it. What are money market funds? Okay, let me break this down in very simple terms. You know how we keep our money in a savings account at a bank, right? Well, a money market fund is kind of like that, but with a little twist. It's an investment that pulls money from lots of different people to invest in a super safe short term investment. Think of it like this. Imagine you and your friends all put your money together to buy something bigger than none of you could afford alone. That's similar to how money market funds work, except instead of buying something, the fund managers invest that pooled money in things like government securities, which are usually treasury bills and bonds. And then we have certificates of deposit or bank deposits, basically lending money to the banks, and other safe short term investments like commercial paper, which are short term loans to big companies. These funds are managed by what we call fund managers. Now you might be wondering, what's a fund manager? Simply put, a fund manager is a financial professional who is trained and licensed to manage other people's money. In Kenya, these fund managers must be licensed by the Capital Markets Authority to operate, also called as CMA. This is really important because it means they are regulated and have to follow strict rules to protect your money. So let's go through the safety measures in place in money market funds. Now, let me explain something really important. While money market funds aren't covered by the Kenya Deposit Insurance Corporation, like bank accounts, they have other strong safeguards in place. Okay. Number one, they have CMA regulations. The Capital Markets Authority oversees all fund managers to ensure they follow strict rules. And then we have number two, trustees. Every money market fund has a trustee. Think of them as watchdogs who make sure the fund manager is doing the right thing with your money. Okay, and number three, we have custodians. These are usually banks that actually hold the investments and these investments for the fund managers, which adds another layer to the security. So we have CMA regulations, we have trustees, and then we have custodians. With these protections in place, I can tell you that your money in a reputable money market fund is generally as safe as it would be in a bank. In fact, I want you to do something for me. After this video, check the interest rates on your savings account. If it is lower than that, or that it's lower than what money market funds are offering, which is usually and often the case, you might want to consider moving all of that money into a money market fund. So let's go into what would happen if a fund manager goes out of business. And I know this is a question most of you have been asking yourself, and you might be wondering, Susan, what happens if the fund manager goes out of business? Do I lose all my money? That's actually a really, really good question. And I'm glad you're thinking about this, because this is what sets people from being sets people who are being scammed from those who are not scammed. Yeah, thinking about such things. And let me put your mind at ease. Even if a fund manager were to go under, your money in the money market fund is safe. Here is why. Number one, The money in the fund isn't actually held by the fund manager. Remember those custodians we talked about earlier? They're usually big, stable companies that hold the actual investments for you, or for all investors, for fund managers. The fund managers just makes decision about those investments, but the custodians, they hold the cash. Okay. Number 2, you also remember the trustees we talked about? The trustees has a role to ensure that your money in the fund is kept completely separate from the fund manager's own money. It's like having your money in a separate sealed container that fund managers cannot touch for their own use. So your money is safe that way, okay? And number 3, if a fund manager were to go out of business, the Capital Market Authority, CMA, has procedures in place. They would oversee the transfer of the fund to another licensed fund manager or ensure that investors get their money back. I know this might take some time, but they will do that for you. Your unit in the fund remains yours no matter what happens to the fund manager. So while it's natural to worry about these things, the system is designed with multiple safeguards to protect your investment. This is why it is important to only invest with CMA licensed fund managers who follow all these rules and regulations. So the next part that I want us to cover is how do money market funds work. But I've realized that this video is going to be very long, so I'm going to cut it here. I'm going to cover how do money market funds actually work in my next video, a part 2 of this. Yes, and yeah, I hope you learned a lot in this video because we have been able to cover what money market funds are, what would happen if a fund manager went out of business, and regulations around money market funds. So remember to share this with your friends, like the video, and subscribe to my channel. Let's grow together and happy investing. See you in my next video. Bye.